Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, December the 18th. The year's 2019. Let's talk trading. How to improve your trading. Overcoming fear. Fear is future or false events appearing real. Why do you have fear in the first place? It's probably because you might be afraid of the outcome. But in trading, what are the two outcomes? Either profit or loss. And as you've been watching these screens, these videos every day, I always have to bring up the risk and money management. Because so long as you protect your downside and you don't lose any more in any particular trade than what you're willing to lose, what's there to fear? That's it. That's your biggest fear. Of course, there are those black swan events that if you're not looking could, have catastrophic results to your account, but usually that's not going to happen. The point being is there's nothing to fear. You're trying a new system, you're afraid it might not work. Well, it might not work, but if you put your risk management in place, there's nothing to fear. Especially if you're trying out something new, just trade a dime a pip. Maybe you lose what, $1 or $5. I mean, at a dime a pip, 100 pips, only $10. I mean, come on. Let's think about it. Let's be real here. There's nothing to fear. It's all imagined. So you just have to get out there and trade, boys and girls, fellow traders. It's that simple. Now, just remember one thing. These videos are for educational purposes only, and your results may vastly differ from mine. From my results. Now, trading's risky. It's very risky. You can lose all your money. Put your money in an account. You could blow it. All your money gone. So, if you're seeking financial advice, trading advice, investment advice, any advice having to do with money, make sure you get your advice from an accredited financial professional. That way, when you lose your money, you got your advice from an accredited financial professional rather than somebody you heard on YouTube or the internet somewhere. Okay, we're looking here at the dollar yen H4 chart. And the way the dollar yen has been trading, well, then again, it is December and things are slowing down, but there's really not much of a trading range. There just really isn't. On the weekly, we still have 1, 2, 3 gaps that haven't filled. And you can see dollar yen is still in the upper wick zone of the previous week's candle. On the daily, we're only 5 pips below the yearly open, so it looks like we just might get back to where we started. Isn't that funny? I mean, think about it. A whole year and we wind up right back where we started. And you can see here we had an inside bar yesterday. And this is the first trading day of the week, and then the first trading day of the month, and the first trading day of the year. You can see how these ranges are inside of each other. Opening day for December right there. So the month is green, the week is green, and the daily is green. You can see here we're getting over the February first trading day high. There's that inside bar. We did break out below it by what? The low was 39, only 4 pips. Nothing really to write home about, but hey, pips add up, right? The range, we've got 5 over 100. And you can see right there we broke out of that previous day's low. Got close to the high, but no break. H1 highest open, looks like this hour and about 4 hours ago, pretty much the same. And you can see we're dropping below. Pivot point was inside the buy zone. It got taken out. So here there was what, 4 pip difference between the pivot point and the open. I mean, 4 pips is 4 pips, right? Ask yourself this question. If there was a method that paid off each and every day, 4 pips, would you trade it? It's all you get, 4 pips each and every day, day after day. Would you trade it? You have to answer that question for yourself. Because, I mean, you could be trading $100 a pip and bringing home $400 a day. You could be trading $1,000 a pip and bring home $4,000 a day. But the question is, would you do something every day if that's all you would expect or could expect was 4 pips? Looking at the rat zone on the pound dollar here, range is large enough. And you can see price put in the low here. It's been trying to crawl back up above. Back to the pivot, we saw we took it out. Weekly pivot still down here at 109.15. We're moving away from it. And the weekly R1's at 109.87 or 88, depending if you want to round. And we're not too close to either one of those at the moment. And once again, you see we took that out. And I don't know why this indicator is doing that. Show pivot. Huh. Oh, maybe there's an object that's on here that doesn't belong on here. Maybe that's what it is. And I'll just show you. Click on the object list. Let's see. Oh, actually, those aren't objects. That's the data window. We switch over to H4. I wonder if I made a change in that indicator that fouled something. And then we put it back and it's gone. I'll have to double check that. Okay, we were looking at the price action because there was a trader that wanted me to explain about it. And then I guess he had a couple of more questions. In fact, let me pause the video. I want to go check out those questions, make sure I get them answered. Okay, back to you. Yeah, the trader was asking about a couple things I called winners and losers. And I was just doing that just for the sake of discussion. He's like, you know, why would I call this one a loser? Well, I was just saying, let's say you went short and then it reversed on you and maybe you scratched out in a trade. So you know, you went short, then it came back and closed above, and maybe you said, you know what, it closed green, couple greens in a row, I just don't like it. So it was just me trying to be more than fair, calling the wins and losses at these lines. So for example, for today, And he also asked me about the wick, using the wick zones and higher highs, higher lows. Okay, so right here, there's a short red at the line, okay, and it just keeps going. So one of the things about this is once it switches from one color to the other, to me, if you enter here, yes, you could enter here, but you're kind of late to the game, by a couple of hours there, by 25 pips. So you just have to be careful. But in this case, it paid off another 25 pips. And so right here, this would be a long, and then, or this would be a short. So that would be almost a scratch trade or a pip. This would be a few pips. Here's another long, and here's a long. But once again, we had to flip the colors here. So you're kind of late to the game there. Here we go, a short, nice short. There's a long here, and see right here, lower highs. You see here it failed to make it above. So you're kind of pushing it if you entered here, because this was the true entry down here. So you might want to say with the H1, it's the first line encountered after a color flip. So here we had a color flip green. That would have paid off. If you tried it a second time, you might have gotten your fingers burned. Here, a short at the line would have paid off. Another short, possibly, another nice payoff there. But then it turned, changed colors, green, a payoff, another payoff. Here's a short, and it reversed on you, but you see higher lows, so price isn't pushing down. It came out of this wick zone, came out of that wick zone. Scratch the trader, take your 1 or 2 pips. That's what I'm talking about on that price action. So we're looking at wick zones, we're looking at higher high, higher lows, and it's just trading sense. It's kind of putting things together in your own way. So yeah, I'm looking at higher highs and lows and lower highs and lower lows. I'm looking at the wick zones, and it's just kind of telling me a story. Is all that's happening here. We've got higher lows. Here we got a 1, 2, 3. Got a higher low, a lower low, a higher low. So it's kind of saying price is going the other way. Okay, and here on the highs, we got a lower high, a higher high, a lower high. So it's kind of telling me price is going the other way. So it's just how you read it and the time frame or chart period that you're looking at. It's nothing that difficult. We're in the wick zone again. You see we went in and out a couple of times. Horizontal lines, we've done that. And as far as price action, there's just not much. We're coming up to that holiday season. Just not that much action. As far as the Einstein line, you see I opened this portfolio a while ago, or this profile. So there was a couple of long trades there, some short, might have gotten your fingers burned here or here, and then paid off nicely there. And we're in that weekly upper wick zone, as I mentioned earlier. And if you look here, you can see we once again hit that open plus half of the min ATR right there. Nice place to look for a reversal. Nice place to take profit if you're trading away from the daily open. Range on the week is 40, range on the day is 23. I mean, there's just not that much out there as far as dollar yen goes. Other pairs probably a little bit more profitable, a little bit more price action. And I'm thinking I'm going to probably switch over to a different pair. I'm thinking maybe switching to the euro dollar, since I believe it's the most traded and people like to trade it. And just get back into doing some euro trades just for the heck of it. Because sometimes you might want to switch up. But remember, it's not what you trade, It's how you trade it. So drain the banks.